agents, and welcome back to the 17th episode, the very best episode of the One Bite at a Time show, where we go out and find the most important, the most relevant information you need to know right now in your business, and we bring it to you one bite at a time.
Yes, Steve. Today we're going to be talking about why a borrower's payment could unexpectedly increase and how to prepare your buyer.
This is so important, people. A lot of times, we have a great transaction and everybody loves us and we're doing great and we're looking forward to referrals, and then all of a sudden something bad happens and they change their opinion of how things went. So we want to continue that same level of service. And one way to do that is to prepare your buyers for possible things that might happen in their loan documents or in their loan or loan payment.
So here are the top 4 reasons of why your payment would increase.
All right, number 1, you got to understand this. This happens all the time. It's because the government doesn't allow your lender to collect more taxes than what's actually due or being charged on the tax assessment rolls. And because it takes them a long time to update the tax assessment rolls, sometimes 6, 8, 10 months, even a year or longer, 2 things might happen that's going to cause frustration in the eyes of your buyer. And if you can prepare them, if we can prepare them, they're going to have a better experience for this when it does occur. So number 1, if your buyer is buying a house for considerably more than what it is being currently taxed at for the tax assessment amount, then what's going to happen is we're going to quote to the buyer what their payment is supposed to be based upon the property taxes that are supposed to be. And 2 things can happen. Number 1 is their payment can suddenly drop at the closing. In other words, their first payment is going to be $200, $300 less than what we quoted it to them. They're not normally going to think they should rock the boat and call me and tell me that. They're thinking it's free money. So they're happy as a clam. Not to realize that later on, the lender is going to increase that tax rate again, therefore increasing the payment, and that's going to freak them out. They're often going to ask them for a large sum of money to catch up with the payments that they didn't make, the supplemental payments, supplemental tax payments. And remember, supplemental tax payments are not set up in the impound account. Now, if your buyer doesn't pay those supplemental tax payments that they didn't pay to catch up, then they're going to raise the tax payment even higher to catch up over a period of time. Another thing that might happen is the payment starts out like it's supposed to start out, but 6 months later, when the lender gets around to doing a tax assessment of the impound account, they realize they're collecting too much because, again, tax assessment, the county tax assessor hasn't caught up yet. So they send your buyer back a credit, a refund, a check in the mail right in time for Christmas. So they're excited. They don't know where it came from, so they're going to spend it. But just a few months later, that same lender is going to call them up and they're going to say, or they're going to write them a letter and they say, we need you to send that check back or the same amount of money back, which is going to frustrate your buyer. We try to explain this to them, but it's going to happen. It happens a lot. So that's the number 1 reason, the most common reason why payments change after a loan transaction closes.
Number 2, the opposite can be said in a decreasing value market. So if your buyer is purchasing a house for less than what the previous owner had purchased the home for, their payment would potentially go down due to reassessed value of the home and decreased taxes.
Number 3, you have to understand this too. The lowest paid people in the mortgage industry are the data entry people. They're normally college students that are working their way through college, and they hire them for temporary purposes and they're doing data entry. So when there's a servicing change, remember, when your borrower gets a letter stating that their servicing is changing your ABC mortgage to XYZ mortgage, their loan servicing company has changed, but their loan is still with Fannie Mae or Freddie Mac. It hasn't moved. It's just the servicing that have changed. But during that changeover, anytime there's a changeover, data entry errors can be made. So I tell people, when a loan transfers servicing companies, they need to watch their payment. Keep an eye on those statements, the last one from the last company and maybe the first 2 or 3 from the new company. Make sure that payment doesn't change and something on that statement doesn't look right. You want to call your loan officer. One of the greatest things about working with a broker, a wholesale direct broker, if you are working with us, hint, hint. Anyways, if you're working with us, have them call their loan officer. We are there for that client for years afterwards. If they have a problem with their loan, the transaction or the servicing company or something's going wrong, they can call us and we can help them get through.
All right. Number 4, let's face it, guys, taxes and insurance increase over time. And that's another reason why your payment can unexpectedly change. If a property tax assessment is now added onto your property, that will reflect with the mortgage company, or that will reflect with the servicing company reaching out, wanting to get the shortage of that payment. And the same thing with your property insurance. If you have a claim on your insurance and your premium goes up significantly, your mortgage payment that's escrowed will go up significantly. And keep in mind, your buyer will get a letter stating that their payment has changed and their escrow account is short. We always recommend the buyers, if they can, to pay the lump sum. It can take years for the servicer to catch up with the bills. Because if you don't pay the one-time lump sum to catch up, what the servicer will do is take that outstanding balance, divide it by 12 months, plus the increase, and you'll be paying that double amount for about a year before the payment goes back down to the regular amount. And this can, again, take a couple years to balance out. So really recommended to pay the one-time payment if your buyer is able. And an added frustration could be if the servicer is changing companies at the time that they're still trying to balance this escrow account. So it's always much better for a buyer to pay the one-time payment if they're able to.
Okay, so what does this mean? What do we do? What happens if one of these things occur? So first of all, don't panic. If your buyer calls you, tell them don't panic. All they need to do is call their loan officer, and hopefully their loan officer isn't going to push them back to the servicing. That's not real good customer service. I know that I know personally a loan officer and a loan company that teaches its loan agents to make sure that we provide customer service for years on. You might know who that might be.
I never get complaints about escrow accounts.
You never do.
Well, okay, they call me about it, but I've always prepped my buyers, especially the first-time buyers, about supplemental taxes. Because yes, Steve, this is a very frustrating process, or can be, especially when one is not expecting it.
That's right. And I know that sometimes buyers have selective listening. We might explain this, we might send them a video explaining this, and still it happens and they don't know what's going on and they're frustrated. And some people will get downright angry, and it's a matter to let them know, don't panic, call your loan officer and he or she will go through. If necessary, we'll get on the phone with their servicing company. We will figure out what was happening, make sure that they understand it, and make sure that there's a clear process to resolve the issue completely. The biggest thing we want to prevent here is the borrower changes their opinion on how the loan process or the purchase process happened. We want to continue to get referrals. I'm sure you do. I know we do. So we have to stay on it. Loans close, but that's not the end of the transaction. We have to be available for them. And I know we here at Vintage Mortgage Firm will always be available for them for any problems or any questions related to mortgage finance for the rest of our lives, as long as we're in the business. With
that being said, we created a video that does go out to all of our buyers when their loan has closed. And you can find the video on our YouTube channel, The One Bite at a Time Show /Vintage Mortgage Firm. This is a great video that we send out to all of our buyers in a transaction, letting them know what to expect when their loan closes. we talk about this very specific topic.
Okay, and the last thing I want to mention is the fact that you have access to this beautiful cup for the One Bite at a Time show. All you have to do is subscribe to our YouTube channel. That's again the One Bite at a Time show / Vintage Mortgage Firm. And that'll also give you access to the searchable library for every topic you can ever imagine. The longer we go, there's 16 episodes, 17 episodes now in there. So you'll be able to search for any kind of topic you want, and over the years and months you're going to be able to find whatever topic you want and be able to see the small bite that was involved with that particular topic. So the One Bite at a Time show, if you subscribe there and you also register, go back to the email that you got this video on and you can register right there. And once you do that, please email me or Roxann or anybody, info@vintagemortgagefirm.com, and say, I have completed, I've registered, and I've subscribed, and please send me the One Bite at a Time show cup. There's going to be some super prizes coming up in the future for all of those who have one of these cups. Another thing about the cup is we're going to be giving them out at our party. I would like to see you. We would love to have you save the date. We'd love to come socialize with you, spend some time with you, have a few drinks with you. It's going to be at the Murrieta Wine Ranch on October the 13th, which is a Thursday. And it's going to be from, say, 4 to 7, whatever you want to do, as long as you want to spend there. And your first 2 drinks are on us. We hope you come. Save the date.
If you are interested in attending our event at the Murrieta Wine Ranch, please make sure you email Steve or myself or info@vintagemortgagefirm.com so we can get you on the guest list.
It's going to be awesome, guys. Don't miss it. And we'll see you next week for the 18th episode of the One Bite at a Time show. Good to see you guys. Have fun.